Among the stocks that have been performing well in the market, one of the well-known ones is NIO. The technology it has is commendable and has been recognized worldwide by various other companies. It is also one of the best EV manufacturers in the industry, capable enough to give good competition to Tesla. With the hype for EVs booming up in the market, it's essential for the companies in competition to ensure that the technology being provided by them is in one or the other way stands out among the crowd. So without any further delays, let's dive into it and welcome you to this channel where we'll tell you more about the best stocks in the market in which you can invest and make your portfolio better. Today's video will be about NIO and the most recent updates this stock has been making in the market. We'll be taking into consideration the latest updates in the technology and the technology that they've been relying on to make themselves successful enough to be recognized in the international market. Make sure you hit the like button, subscribe to this channel, and let us know in the comments section about the impact you think this stock will make in the market and the sector it works in. We'd love to hear your opinions about this stock, so make sure you respond in huge numbers. Before we get started, allow us to shed some light on the volatility noticed in the market and the effect it could have on you. It is important you gain good knowledge and track its past record thoroughly before making an investment. We're not financial advisors, therefore our analysis will be from a different perspective compared to that of professional financial advisors. It's recommended that you consult with one and make sure you make the right and informed decision that could fetch you a good profit. And as always, try holding it for longer and let the profit accumulate by holding time at your disposal. NIO recently came into the news for being able to produce a record-breaking delivery in a single month. NIO could accomplish the milestone of being able to deliver 10,878 vehicles to touch a gain of 106% year over year in the last month. This stock was also able to produce in huge numbers, as you must have noticed already. However, it's important to keep in mind that the stocks, on the other hand, haven't really been performing in the same manner. The stocks seem to have gone down by over 50% despite the fact that they hit a record-breaking month. This drop is in comparison to the highs earlier this year. The drop in the stock market is due to some specific reason, out of which the most important one is the delisting in China. China, being one of the greatest markets for electric vehicles, seems to be recruiting a major fear in the minds of investors worldwide. Them pulling out of NIO could also mean a significant drop in the sales it could make in any year. This is one of the major reasons why we've been noticing a significant drop in their stock prices. Nevertheless, NIO has still continued to focus on their technology and keep advancing in the best manner possible as an attempt to mitigate the losses that they expect to have. It has also become one of the cheapest in comparison to the competitors, which is also an outcome of the fear that the investors have in their minds throughout the world. However, we think that this fear is short-lived and will soon be superseded by the technological advancements being made by the company. This means that we'll see NIO being active in R&D and trying to come up with more developments in a very short duration of time. Looking at the charts, you'll notice that the prices have significantly dropped over the course of this year. This means that this drop will also attract a lot of investors who look at this drop as an opportunity to get into one of the leading EV manufacturers in the world. This can be further strengthened if NIO packs it all up with some updates that haven't been rolled out in the market. The crash in the 52-week low, which led the prices to touch down below the $30 mark, is therefore something that has happened for the first time in over a year. So, looking at it from a neutral point of view, you'll be able to conclude that the only factor that is really affecting the prices on the charts is the delisting that China has come up with. Furthermore, it is also a fact that the stock has been oversold for quite some time. This means that it's about time we see the prices rise back in the market. This will therefore be a good time for new investors to jump into NIO and make the profits they've been unending to make. Based on what we see on the charts, we accept the double bottom to be formed at the $30 mark. On the other hand, the full stochastic seems to be starting to turn to an upward trend, meaning that the prices will certainly get back to the higher margins in the coming days. As we mentioned earlier, despite China being a major market for EV manufacturers, the technology that NIO has in itself is sufficient for it to make a comeback after a fall. China's effect on NIO must not really be high, keeping in mind we consider the kind of technology that NIO constantly comes up with. Not only this, but a lot of other Chinese stocks have also been crushed lately. Therefore, NIO is not really an exception in this case. The political ambiguity could be one thing that a lot of the investors or observers would blame in the current scenario, and perhaps that could be true depending on the factor that you take into consideration. A stricter regulation coming in by the Chinese government could make things worse for not only NIO but for a lot of other stocks in the market, and therefore a stronger hold is a necessity. Declaring that the government will fundamentally bring in more regulations against the stocks will be a wrong approach for the entire situation. Perhaps we think that it would be better to take into consideration the possible effects that this could have on the Chinese market. The Chinese market has also been developing very recently, concluding that the regulations will certainly worsen the situation at hand. Therefore, our research has brought us to the fact that the Chinese regulators recently came out with a statement that was in favor of the stocks. It states that it respects the Chinese companies listed in shares to raise funds and stated that the push for the variable interest entities to drop their US listings are nothing but misinterpretation and misrepresentation of their interests and the agency's regulations. NIO, being a premier EV manufacturer, will not fade away from the market at all. The technology that it has at its backing will certainly stand tall for the company and will also speak louder than the prices it has been listed for in the market. It is also important to keep in mind that NIO also has support from the Chinese government, and it was the same government that came up with an investment of $1.4 billion during the pandemic, with the objective of supporting the company through the pandemic. All these factors are a clear indication that the Chinese government has constantly been working to ensure the EV manufacturer keeps excelling. Therefore, the concerns of delisting will, as we mentioned earlier, fade away with time. Accumulating the numbers throughout this year, we think that NIO must deliver a revenue close to $6 billion this year. The stakes are high, and the numbers seem to be touching the roof already. It will not be incorrect to hold that there will be a substantial increase in the share prices, and we think that it's about time we see a start to the rise in prices. These indications certainly lead us to one conclusion: a spike all the way to touch the $200 mark in the coming years. We hope this video brought in a lot of information for you to work and dwell upon. We'll be coming back with more videos in the times ahead. Until we meet again, make sure you watch all other videos, hit the like button, and also subscribe to this channel to make the most out of this channel. Till we meet again, keep investing.